Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental stock analysis of Vinco Ventures Inc., ticker symbol BBIG, BBIG. So currently, Vinco Ventures is trading for just over $2.80 per share. Year to date, they've done quite well, especially compared to the overall market. They're up about 18.5%, while the market is down about 20%. Going back the past year, however, they are down 20%. And zooming out all the way back to their IPO 4 years ago, they've about fallen in half in this time. Something to point out here is that they've had these huge spikes in volume, really starting in, it looks like, the third quarter of 2021. And then they've had a couple other of those spikes so far this year. One at the beginning of the year in January, and then another uptick of volume in May. So Vinco is about 90 cents over its 52-week low, which is down quite a bit from its 52-week high. It's a nearly $600 million market cap, and it's got quite a bit of short interest at 15%. So for some background about the business, Vinco Ventures is a vertically integrated end-to-end consumer product research and development, manufacturing, sales, and fulfillment company. It is a consumer products and digital marketing company which aims to advance product, people, and brand recognition through digital marketing and its technology platform. The company leverages its new market opportunity by utilizing its BIG, Buy, Innovate, Grow strategy. It offers toys, plushes, homeware, and electronics to retailers, distributors, and manufacturers through e-commerce channels and personal protective equipment to government agencies, hospitals, and distributors. The company was formerly known as Edison Nation Inc. and changed its name to Vinco Ventures in November of 2020. Vinco Ventures was incorporated in 2017 and is based in Fairport, New York. So with that understanding of how the company does, we'll be performing an 8-pillar analysis, taking a look at 8 different metrics to come to a holistic beginning understanding of Vinco Ventures. So starting off with pillar number 1, we want their average 5-year PE to be below 22.5. So Vinco has only been public about 4 years. Still, they've had negative earnings throughout this entire period, so pillar 1 is going to be an X to start off. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over this time period, they've had a negative return on capital, which means that for every dollar invested into the business, they're destroying this percentage of that dollar. Over long periods of time, a stock is going to return what its underlying business returns, and a business's return on capital is going to be those business returns. So this is not a good sign here. Another X on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. And unfortunately, we don't see that here. Their revenue has decreased from $15 million in 2017 to just under $10 million in 2021. So far, not so good. We're 0 for 3. Pillar number 4, we want to see 5-year net income growth. Here we can see that they must have had some sort of write-off because their net income is such a difference from the rest of these years. So with this potential write-off or extra charge included, they've had negative net income in 4 of the last 5 years, including the last 4, and their net income has decreased over this period. So that's another X on pillar number 4. Moving on now to pillar number 5, we want to see decreasing shares outstanding. This is not a good sign here. They've increased their shares outstanding from 3 million in 2017 to nearly 64 million by the end of 2021. So that's a 95% dilution. So if you're an existing shareholder, when a business issues new shares like this, it means that they're diluting your ownership percentage of the business, which ultimately means that you're entitled to a smaller percentage of the profits that the business generates over time. So if you had been a shareholder in 2017, that one share that you've held is now only entitled to 5% of the profits that it would have been in 2017. So this is really terrible dilution. And so far, Vinco Ventures is 0 for 5 on all of our first 5 pillars. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business and can be used to pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back into the business. So as we can see, their free cash flow profile has been very similar to their net income profile. They've had negative free cash flow in each of the last 4 years, and they've had a huge hit to both cash from operations and free cash flow in 2021. So pillar number 6 is going to be an X. On average, Vinco Ventures burns about $8 million a year. For pillar number 7, we're looking at how they utilize leverage. So we want their net debt, which is long and short-term liabilities minus cash and short-term equivalents, to be less than their 5-year average free cash flow multiplied by 5. So we can see that currently they have negative $40 million of net debt, which means that they have $40 million in cash and short-term equivalents. So I take back what I said about a potential write-down earlier. Based on the net income, free cash flow, and then this huge increase in cash, they either spun off or sold a major asset here. So they're burning about $8 million of cash each year. Multiplying that by 5 comes out to $40 million. So just by the skin of their teeth, pillar number 7 is a check. They have just enough money to be able to pay off their liabilities, and we are not going to go 0 for 8 on our 8 pillars. So that's a relief for these guys. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20. So they have a nearly $600 million market cap, and like we established, they don't produce free cash flow. So pillar 8 is going to be another X. And then just to make note of, Vinco Ventures does not pay any sort of dividend, not that they could support one anyways. So in summary, Vinco Ventures checks the box on 1 out of 8 pillars. Because of that asset sales / spinoff, they have just enough cash to stay afloat. Outside of this business is a train wreck. Unless there's something in the works that's off of their financial statements, based on this holistic look at their financials, this company is in tough shape. There are a lot better opportunities out there in the market, and this is really just not something you want to waste your time on. Based on its overall volatility and these spikes in volumes, this one looks like a highly speculative play and is trading as one of these more pump and dump type of stocks. So that's it for today's fundamental stock analysis of Vinco Ventures Inc., ticker symbol BBIG. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what company you want me to take a look at next. Vinco Ventures was a subscriber request, so thanks for learning about it with me, and have a great day.